Hey everyone, welcome back. We're diving deep today. You ready?
Always ready for a deep dive.
It's all about financial literacy today.
Yeah.
And, how to actually build some wealth, not just like dream about it.
Right. Gotta have the mindset, the strategy, the whole 9 yards.
Exactly. So we're cracking open Rich Dad, Poor Dad, the Kiyosaki classic.
Yeah. Love that book. Always a good refresher.
Plus, got some stuff from Investopedia and some of my own notes. Kind of a mishmash of all the good stuff.
Sounds like a solid plan.
Definitely. So, right off the bat, my notes talk about these three parts of financial literacy, right? Knowledge, skills, and then behavior.
Oh, interesting.
Yeah.
Yeah, those are the key elements.
You think one of those is harder for people than the others? Or is it all of them together?
Tough one. I mean, it's kind of different for everyone, right? But I'd say it's the combo that really gets people. Okay, you might have the knowledge, right? You read all the books, you know the terms,
But
but
then you got to actually do something with it.
yeah, exactly. It's like having all the ingredients, but you don't know how to cook. You're missing the skills to apply that knowledge.
So knowing what a stock is doesn't mean you know how to buy and sell and manage them, right?
Precisely. And then there's the behavior part. You could have the knowledge and the skills, but, well, if you're impulsive, if you're spending emotionally.
You're going to sabotage yourself.
Exactly.
You know what this reminds me of? That thing in Rich Dad, Poor Dad about, changing your mindset. Kiyosaki talks about those two dads, right?
Oh, yeah, his poor dad versus the rich dad.
And the poor dad always said, I can't afford it. But the rich dad would always ask, how can I afford it?
That's so powerful. It flips the script completely.
Right. It's like instead of closing the door, you're opening up all these possibilities.
Your brain actually starts looking for solutions instead of just accepting limitations.
But, does that mean we should try to afford everything we want?
Not necessarily. It's about asking the question. Let's say you want to go on a vacation, right?
Mm-hmm.
But, money's tight.
Yeah, you're thinking, can't afford it. End of story.
But what if you ask, how can I afford it? You might start brainstorming, finding creative ways to save or earn some extra cash.
Makes sense. And this actually ties into another big concept from Rich Dad, Poor Dad, the whole assets versus liabilities thing.
Oh, yeah. That's a game changer. It really challenges how people think about what they own.
Totally. Everyone thinks their house is their biggest asset, right?
Yeah.
But Kiyosaki kind of throws a wrench in that thinking.
Right. If your house is draining your cash every month with the mortgage and the taxes and repairs.
Is it really an asset? Or is it more
A liability in disguise.
Right. Makes you think. It's all about the cash flow, isn't it?
It is. An asset puts money in your pocket. A liability takes it out. Simple as that.
So my car, definitely a liability. Gas, insurance, all that.
Definitely. But, something like a rental property could be either. Depends how it's managed.
Right. If it's bringing in more than it costs, then
It's an asset. But if it's a money pit,
definitely a liability.
that's the key. Understanding how things really function in your finances, not just how they appear.
Yeah, that's what it all comes down to. And this brings me back to the audiobook, Kiyosaki, he says, wealth is the measure of cash flow from the asset column compared to the expense column. Powerful stuff.
It totally reframes how we view wealth. It's not just about how much you earn, it's
It's how much your money is earning for you.
exactly. And this kind of segues into another fascinating idea from the book, those sophisticated investors. The ones who seem to be getting something for nothing.
Oh, yeah, that's intriguing. Who wouldn't want to learn how to do that?
It's not about magic, though. It's more like understanding their approach, They think long-term about sustainable wealth, not just quick wins.
So what's their secret? What makes them so different?
Well, for one, they focus on speed of return, getting their initial investment back fast.
So instead of waiting years for things to grow,
They're thinking, how quickly can I get my money back?
and then once they get their money back,
That's where the something for nothing comes in. They structure things so they also get additional assets like a bonus.
wow. What kind of assets are we talking about?
Could be anything, really. Property ownership, shares in a company. Imagine you invest in a development project, you get your money back through pre-sales, and then...
You get a unit in the building for free.
Exactly. It's like getting paid twice.
That's incredible. But there's got to be some risk involved, right?
Of course, no investment is completely risk-free. But these investors, they're masters at managing risk. They choose ventures carefully and only invest what they can afford to lose.
So no gambling with life savings.
Nope, it's all very calculated. And they use tools to protect themselves. Like in the stock market, they might use a stop loss to automatically sell if the price drops too low.
So it's not really something for nothing, more like.
Working smarter, not harder.
Yeah, that's it. You're using your financial intelligence.
Exactly. It's all about making smart decisions, being strategic, and creating opportunities.
In my notes, I've got this definition of financial intelligence. It says, the ability to make money work for you. It talks about learning about financial stuff, taking risks, and making opportunities happen.
That's a perfect definition. It's about taking control, making money a tool that works for you, not the other way around.
This is all really eye-opening, but I'm sure our listeners are like, okay, that's great, but what's next? We've only just started to dig in.
Oh, we've got much more to uncover, more strategies, more insights from Rich Dad, Poor Dad, and, some practical stuff too.
Awesome. Well, everyone, stay tuned for part 2, where we'll keep going down this rabbit hole of financial literacy. Welcome back, everyone. We're still deep in Rich Dad, Poor Dad territory.
Yeah, part 1 got us thinking about mindset, assets, and liabilities, all that good stuff.
Right. And how about those sophisticated investors? I'm still trying to wrap my head around that getting something for nothing thing.
It's really about smart choices, long-term thinking.
Definitely makes you rethink your own approach to money.
Yeah.
I mean, I'm pretty good with the basics, but there's always more to learn, right?
Always. One thing that stood out to me this time around, Kiyosaki talks a lot about fear and greed, how they hold people back.
Oh, yeah. Like fear keeps you stuck in the rat race, working just to pay the bills.
Exactly. You're afraid of not having enough, so you work harder, but then the greed kicks in. You get that paycheck and...
It's burning a hole in your pocket already.
It's a cycle, Earn more, spend more, never really getting ahead.
It makes you realize why building assets is so important. When your money's working for you, you're not so caught up in that cycle.
You're not chasing that next paycheck.
This made me think about my own finances. I was looking at my savings account the other day. Those interest rates are, like 4.75% right now?
Something like that. It's better than nothing, but...
But is that really the best way to grow your money? I mean, it's safe and all, but...
It might not get you where you want to go long term.
Exactly. So then, what do you do? I mean, Rich Dad, Poor Dad keeps saying get financial education. But it's overwhelming, right?
It can be, yeah. Taxes, investing, all that stuff. It's like, why didn't they teach us this in school?
Seriously. But okay, so where do you even start?
Kiyosaki talks a lot about finding mentors, people who are already successful, who can guide you.
Like finding your own rich dad, basically.
Yeah, someone who's not afraid to take risks, to think differently about money.
But he also says you shouldn't just blindly follow advice, right?
Right. It's about developing your own financial intelligence. You got to understand the why, not just the what.
So it's a balance, learning from the experts, but also thinking for yourself.
You got it. It's a journey, Financial literacy, it's always evolving.
Okay, that's reassuring. Because honestly, the whole investing thing can feel kind of intimidating. So many choices. Real estate, stocks, starting a business.
You don't have to do everything at once. Kiyosaki talks about turning earned income into passive income.
So keep your day job, but also build assets on the side.
Exactly. Multiple streams of income, not just one paycheck.
That makes sense. But what if you're not, like, a born entrepreneur? Starting a business can seem scary.
There are other ways. You could buy rental properties, invest in dividend-paying stocks, even partner with someone who has more experience.
So many options. It's about finding what works for you, I guess.
Absolutely. And remember, it's not just about making money, it's about managing it too. Kiyosaki's big on that.
Cash flow, right. Making sure your income from assets is more than your expenses. That's financial freedom.
You got it. And he talks a lot about understanding financial statements.
Oh, yeah. He breaks down those concepts really well, even if you're not a finance expert.
He makes it simple, like knowing the difference between an asset and a liability. That's rule number 1.
Yeah, if you don't get that, you're going to make some bad decisions.
It's all about the fundamentals.
And then, going back to mindset, that whole I can't afford it versus how can I make this happen thing.
It's a game changer.
It's about going from scarcity to abundance.
Exactly. It's not about how much money you have. It's about how you think about it.
This has been an awesome conversation. So much to think about from Rich Dad, Poor Dad. It's like a timeless book.
It really is. It reminds us that financial literacy is an ongoing process.
There's always more to learn.
Always more to discover.
There are more ways to grow our financial intelligence.
Absolutely. There's more to unpack, though. In part 3, we're going to dive into some more advanced stuff from Rich Dad, Poor Dad.
Stay tuned, folks. We're going to talk about corporations, building wealth, and even giving back. Okay, so we're back. Final part of our Rich Dad, Poor Dad deep dive.
Lots of ground covered already, huh? Mindset, cash flow, all that good stuff.
Totally. But now I kind of want to get into the more advanced
The
strategies.
next level.
Exactly.
Yeah.
Like Kiyosaki talks a lot about corporations, right?
Right.
And using them to build wealth.
Yeah, he's a big believer in that. Says it's one of the most powerful tools you can use.
Really? See, I always thought corporations were like for big businesses,
Yeah.
not for, regular people.
That's a common misconception. But Kiyosaki, he argues that anyone can benefit from incorporating.
How so?
Well, for one, there are some serious tax advantages.
Tax advantages, okay. So not just making money, but
Keeping more of it, legally.
interesting. I'm going to have to research that more. It's like a whole other side of financial literacy.
It is. It's about understanding the system, knowing the rules of the game.
Makes sense. And this kind of ties into another big thing from Rich Dad, Poor Dad, the whole taking action thing.
Ah, yeah. You can read all the books in the world, but if you don't do anything...
It's all just theory.
Exactly. Knowledge without action is meaningless.
It's like learning how to ride a bike, right? Can't just read the manual, got to actually get on and pedal.
And probably fall a few times.
Right. But that's how you learn. Making mistakes is part of the process.
Kiyosaki's big on that. He says, don't be afraid to take risks, to try things out.
Easier said than done, though, right? Especially when it comes to money.
Yeah, I get it. Fear of failure, it's a real thing. But Kiyosaki says the biggest risk is not taking any risks at all.
So playing it too safe could actually be holding you back.
Exactly. You could end up stuck in a job you hate just to make ends meet.
And that's definitely not financial freedom.
Nope. Kiyosaki challenges us to shift our perspective, to see failure as a stepping stone, not the end of the world.
So instead of, what if I lose?
It's, what if I succeed?
I like that.
Yeah.
And speaking of learning, the whole mentorship thing, I mean, how do you even find a mentor?
Kiyosaki talks about networking, putting yourself out there, connecting with successful people.
So going to events, joining groups, stuff like that.
Exactly. And it's not always about a formal mentorship. It could be reading books, listening to podcasts, observing people you admire.
It's about being proactive, taking the initiative to learn.
That's the key. And, one last thing I wanted to touch on, Kiyosaki talks a lot about giving back.
Oh, yeah. He's big on that. It's not just about building wealth for yourself, right?
Exactly. It's about using your success to make a difference.
Making the world a better place. Pretty inspiring stuff.
It is. It's about creating a cycle of abundance. The more you give, the more you receive.
Well, that's a great note to end on, I think. So much to think about from Rich Dad, Poor Dad.
A lot to unpack.
Definitely. And, we've only scratched the surface, but hopefully this deep dive has given everyone some food for thought.
Some tools to start building their own financial freedom.
Exactly. Remember, it's a journey. It's not going to happen overnight.
But the more you learn, the more confident you become.
And who knows? Maybe you'll even inspire others along the way.
Pay it forward.
That's it for this deep dive. Thanks for joining us, everyone.